Welcome, everyone, to the Everyday Trader. This is Greg Jensen from OptionsANIMAL. Glad to be with you.
And this is Eric Hale with a little bit more energy than Greg.
I'm tired.
You had a busy weekend. You were father
weekend.
of the groom. Father of the groom. How was that?
Weird. It's good. The wedding was beautiful on Saturday, but it's my oldest, my first wedding. It's weird.
And you're
all of a sudden contemplating.
I'm too young to be a father-in-law.
I'm doing the math of how many days I have left until I'm a grandparent, all those things, right? Anyway.
Hopefully it's longer than 9 months.
Hopefully it's longer than 9 months. Amen to that.
I know you talked about it. The two are in love. They look like a beautiful couple. I saw some photographs. They look so happy. So it was really nice. Glad to see.
It was fun. I'm on the back end. I'm tired now, but other than that.
So Greg and I were talking and said, man, it would be a really good time. We talk about a lot of different stuff, and we're talking about what's happening out there right now. And we're fans of Twitter. You can follow us on Twitter. I'm either under Trader Oasis or Eric714. And what's your handle on Twitter?
My handle is Flyfisher34. I think, no, OptionsANIMAL34.
OptionsANIMAL34. Okay.
Yeah.
Oh yeah. Before we go too far, like and subscribe, right? Got it.
Yeah.
Hit the buttons. But click the buttons, please, and sign up for notifications when you get alert. Because today we wanted to talk about the I'm going to say a semi R-rated word. I'm going to say the shit show that is Elon Musk on Twitter. Holy macanoli, has this been entertaining and fun to watch? Has it been for you?
I was thinking about doing a Twitter poll that I will stick by the results of should I buy a Tesla or not.
Oh, there you go.
I haven't done it yet.
Like Elon Musk, who said that he should I be the CEO, right? That's what you're referring to?
Yeah.
And how did that poll come out?
Well, according to the Babylon Bee, after the mail-in votes were counted, Elon has got enough votes to say that he is still going to be the CEO of Twitter. Fake news you can trust. I love the Babylon Bee. This to me was one of the best reinstatements of all Twitter accounts when it was reinstated.
Oh yeah, Elon to stay CEO of Twitter after counting mail-in votes.
Yeah, that's one of the best tweets I've seen. I've seen some really interesting commentary of that. This is Elon front running the news of the board of Twitter has told him. Actually, sorry, not the board of Twitter. The board of Tesla has told him, you got to stop because of what you're doing to Tesla.
Well, Ross Gerber is basically losing his mind because I think, here we are at the end of the year and Ross has got to write his letter to all of his investors. And I'm sure it's not a very pleasant letter to be writing because he's a pretty big investor. And let's just look at a stock chart for those of you that aren't paying attention. Or not that maybe missed it. This is a 1-year chart. Let's go out to a 2-year chart. And holy crap, we're at new all-time lows from a valuation standpoint. Weeks ago, Tesla's at the best valuation that it's ever been. I think from a fundamental standpoint, they have a great product pipeline. I was talking to somebody today at the gym, and he was saying that, most people, he was talking about internet people, and he's looking to buy a Tesla. He's like, it makes a lot of sense. And I think my mother should buy one too. They're just waiting for the deals that are the incentives that we're going to have next year. And he's like, I think we're going to buy one or two. And I was talking about, are you upset about what's happening on Twitter? And he said, no, that's just internet people. He's like, I pay attention to it. I think it's funny, but the internet people that are upset. And I don't know how much of this is impacting the price of Tesla. Oh, by the way, I have to throw myself on the sword and offer a mea culpa, because do you remember last week when I said something's up? Elon was tweet. The only time I've ever seen him tweet about the fundamentals or the price of the stock has been when there's something going on. And it turns out that I thought there was something going on with regards to him buying or selling. And I thought he was buying stock.
You thought he was buying.
And it turns out he was selling. So the way that works, people, so Elon has all of his money is in Tesla shares. So what he does is he deposits those to the bank, and then he gets a margin loan against that money. on the All In podcast with Jason Calacanis and David Sachs, who I think is probably the next CEO. David Sachs, probably the next CEO.
Yeah.
Of do some research there. Check out the book Founders. There's some interesting stuff there. But they described in how that works is a lot of these people that are worth billions, they take their shares, they don't sell their shares, but they put them with a bank and then they borrow money against them. And what happens, just like any margin loan, if you have a margin trading account, if the stock that you have, the price goes down, obviously it's worth less and you get a margin call and your broker says either deposit cash or deposit more shares or, somehow. And that's what happened. That's what's believed. That's what was implied anyways, is that Musk got a margin call from whoever he's borrowing his money against from his shares, and he had to sell more shares to help correct things, that margin loan. So what's going on is pretty rough and very painful. So Greg and I were thinking,
before you go, Eric, before you go away from the chart that you had up, that 2-year chart of Tesla, is and the interesting, Ross Gerber losing his mind. We need a new CEO. Pull up a 2-year chart of Amazon. Just for interesting comparison. Which of these charts looks better? I'm going to say that Tesla's holding its value much more than Amazon's holding its value right now, in comparison. And so, in one sense, I see the outrage because Musk is so active on Twitter. He's doing something else other than just running Tesla. But why isn't anyone calling for Jassie's head over at Amazon in the same vein? I guess what I'm trying to say is I really don't know how much of the move that's going down in Tesla really has to do with what Elon Musk is doing over at Twitter. And I think it's just a result of what's going on in the market. I think we're seeing the market replay the internet bubble burst of 2000 to 2002. That's my personal opinion. And I think Tesla's just along for the ride to the downside, just like Amazon is, just like Amazon was in the initial bubble burst when they were, a high flying, newly publicly traded company that lost 95% of its value from 2000 to 2002, only to then turn around and become the world's behemoth online retailer, merchandiser. So is there more downside? Is there more volatility in Tesla? Yeah. And does Elon play a role in that? Of course, he's the CEO. But I don't know, to be honest, how much of this is really, you can point the finger and say, this is because of what Elon's doing at Twitter as to why Tesla shares are down. I agree with you. I think the fundamentals of Tesla are as good as they've ever been from a valuation standpoint. I think that volatility is creating opportunity, but it also doesn't mean there may not be more downside to Tesla shares too, as we're seeing today.
Yeah, absolutely. And so my thought, we were talking about, hey, do you want to get together and record a video about Teslas? Let's, for Tesla shareholders, something we'd call it like stop the pain or something like that. Because if you're a shareholder of Tesla and there's people who unfortunately, bought in when the stock was 3 or 4 times, 3 times higher, 2-3 times higher. And there's a huge army of retail traders that are all in. Some people, we were talking about just not too long ago, Tesla, I don't know, a conjugation of the word Tesla and millionaire. So Tesla heirs or something. But there are people individual retail traders who become millionaires on just putting all their money in Tesla. And so those poor people are feeling some pain right now. I just wanted to touch on fundamentals. So this is Morningstar. This is just updated just a few days ago, and they're reiterating a $250 value. So we're $100 below where some analysts think this is worth. So I always say value is like beauty; it's in the eye of the beholder. And just because one person sees a value, but I think you hit a nail on the head, is that there's something bigger than Tesla that's driving the price of Tesla right now. I think part of it is year-end selling, which is normally that ends on the 15th. So we're a little bit late for that to happen. But Elon is attributing it to the Fed, that the Federal Reserve is the reason why And with rates go up and stay up, it tends to be bad for tech companies. So I think there's some things that are outside of Tesla's control. Now, how much of it is due to Elon being Elon? I don't know. A good portion of it is. But what do you do if you're a shareholder? And
Well,
what do you do if you say, well, is this the bottom? What do traders do?
to me, this is one
I
of
know
the
you
core,
have some ideas.
yeah, I was going to say, this is one of the core methodologies of why we even created OptionsANIMAL 20 some years ago to begin with, is that there is a way to be in the market and participate both to the upside and potentially even to the downside and still have your risk managed. And that trade is called a collar trade. And to me, this is the core of my portfolio. It's the, as in my past life, when I've been a professional money manager, both in individual client accounts as well as a hedge fund that I used to be a part of, the collar trade was a core portion of what I did. And this collar trade allows you to go through times of uncertainty without the risk of losing all of your capital. And not just being short the market either. I think that's another important thing to differentiate. Is I'm not trying to time and say, okay, I'm long here, I'm short here. I'm participating bullishly because I still believe in the underlying equity that I own, but I'm going to combine it with option strategies that allow me to take that pain out of the short-term moves that the stock may be having, but still be able to participate in the long-term belief that I think the stock is going to be here for the long term. So yeah, the collar trade to me is the way to play Tesla right now, or any of the big tech stocks that are getting hit right now, whether you're talking Amazon or Meta or NVIDIA or any of the other AMD, any of the other semiconductors that are getting whacked. Even Apple is having a pretty bad couple of weeks right now. That usually isn't as volatile as some of the other ones. So the collar trade is the way to play this sector right now.
Yeah, for sure. So when I learned to trade options, I had already traded stock, and my thought was, I don't want to trade stock anymore. I just want to be an option trader. That didn't work out for me. I found the combination of stocks and options. There are option strategies alone, but you convinced me that, and this is, more than a decade and a half ago, that owning shares and trading options around it is really, something that allows you to sleep at night and take advantage of opportunity. And everything with options is a trade-off, but the collar trade is, I know you like to gamble a little bit. I never actually talked to you about this. Do you play poker? Do you Texas Hold'em play?
Yeah, I like it. I'm not good at it. I'm not as good at Texas Hold'em because I can't hedge it as well. I mean, maybe there is a strategy. You just need to teach me.
Okay. I'd like to hit the casino with you, and I would not want to hit a poker table with you. So that's because it's always play the player, not the cards. And but I used to watch poker on TV. When it first came out, it was fascinating for me. And when they introduced the game, said it takes a minute to learn and a lifetime to master. And I think the collar trade is a little bit like that, because on the surface, it is a very, very simple trade. It is long stock with a short call, and that trade is commonly known as a covered call. And if you add in a long put, so if you have stock and a long put, some people call that a married put or a protected put. It's insurance for your stock, gives you protection to the downside. So if you put the married put together with a covered call, you've got a trade that is very versatile. The thing about it is, and that sounds really simple. So I buy stock, I sell a call, and I buy a put. The challenge is you've got a couple different dials on options. Basically, you've got like an Etch-a-Sketch. You've got two dials. You can go up and down in your strikes, and you can go in and out in your expirations. And by using different expirations and different strikes relative to where the stock is trading, you can have a dramatically different trade. And what I wanted to do was start by showing sort of the basic collar trade application. And this is something that somebody could do right now. Everything I say is going to apply to shareholders. So you could, if you're a shareholder and you're saying, okay, I wish I could stop the pain. I think the easiest way to stop the pain right now would be to buy a protective put. And that puts a floor in here. So we've got an example here of buying the stock at 140.87 and then buying a put. And I'm showing the February put at the 140 strike. And what that does, that long put gives you the right to sell your stock for $140. And so if the stock drops down, you can see this risk profile here. The yellow line is on expiration, and you can see over here in the corner, this 1622, that's the absolute most that I can lose on this trade. So you can't lose more than $1,622, and your upside is unlimited. There, you still got the potential to make money in the upside. The problem is that your break even is going to, if you would hold this all the way to February, you need the stock to be above 156. Now, that's the yellow line. The green line is where the trade is today. And the trade could go higher today. If the trade, say, went to 156, I'd be making almost $1,000. I theoretically, I could be making $1,000. So this, when you think through the married put, do I want to buy the protected put? I'd be paying on this put, I'd be paying $15.55. That's $1,555 plus commissions and fees to buy that. So you and I know that we can sell calls. So let me flip over. So the covered call, we sell a call, and that puts a cap on the profit, and the maximum profit on this trade is about $2,700. This is just a covered call. If we put the two together, and the nice thing about a covered call is, so here's the stock trading right here. With a covered call, my break even is at 129.78 in this example, because I'm going to sell. This is an April expiration at 150. And I know I'm going really fast, and this really is something we should slow down and spend a lot of time for you to understand. But this is the gist of it. It's a covered call and a married put. I put the two together. Now look at this risk profile. The green is where my profit is. So what I have is a trade that does really well if the stock goes up or if it goes down. I really don't care. I can make here, my maximum profit it's a measly $283 is my profit if the stock absolutely tanks and goes down. That's not what I'm hoping for here. What I'm hoping is that the stock goes back up. But this is a nice strategy because it's an explosive strategy. This is a covered call with a short-term put and a long-term short call. And it does well in a market where Tesla is not going to stay here. And it could keep falling, or it could go down. And the worst thing that happens between now and February, when this put expires, the absolute worst thing that could happen is you can unwind this trade for a $900 loss, 927 roughly. It's difficult to precisely guess exactly what that is, but relative to what could happen if you own 100 shares of Tesla, you're pretty muted here and insulated from the moves on the market. Any comments on this strategy?
Yeah, I was going to say, before you go away from that chart, one of the other things I want to point out that's important there is the difference between the gold line, the solid gold line, and the solid green line. The solid gold line is at expiration. That's what this strategy looks like as you go forward to the end of, or to the 17th of February, which is when your short call, when your long put expires. But in the short term, notice that that V got deeper and deeper as time went by. But in the immediate short term, the solid green line there, that actually is where my risk is. And notice that it's basically above zero. If I want to eliminate my risk in the short term, by meaning the next 1, 2, 3 days, the next week, this is a trade I can put on that absolutely shuts the risk off.
Right. And so you don't have to stay in this. You would never stay in this until February. But if, you got hit by a bus and you're a coma for 2 months, that's the worst thing that can happen. I like to look at worst case scenarios, but you're absolutely right. This is a dynamic trade, but basically, as you point out, very importantly, you basically have no risk for the next couple days. Today, the worst thing that can happen is you could lose. If I look at it, if the stock crashed way down here, the most you can lose is $20. So what would happen is the stock would be losing, but the options, the short call will make money and the long put will make money and just about offset itself. So right now, this trade is almost what we would call delta neutral. It's very low delta right now. It's slightly bullish, so it would work, but we could skew this trade a little bit, and I'm a little bit bullish, so I would think you'd want to be bullish in this trade.
Yeah.
So that's
the nice thing, we're just to reiterate what Eric said. we're showing you one little turn of the dial on that etch a sketch. The analogy he used there of one strike price of the put, one strike price of the call, with also two different expiration months. And you can start to play around with this. And sometimes it's, as you look from stock to stock, some of them look better. In fact, I think you're going to show us another example of
Right.
maybe one where the stock actually isn't explosive, but maybe you get a different type of move.
Yeah. So this is an example of another collar trade, which has a completely different set of characteristics to it. So for somebody who maybe going back to this other one over here, this explosive one, if you have the stock right now and you want, like, let's say you bought the stock at a higher price, maybe you want to lock it in right now and you want to minimize, you don't want any loss from now. You can lock this trade in and minimize. So whatever your loss is now, it wouldn't get any worse than like maybe $1,000, absolute worst case between now and then. But if you were going to enter into this now and you thought, well, I'm still a little bit bullish, here's a structure where I've reversed the expiration series. So I have a long put that's further out in time. So this is the 140 put in March and a short call at 145 that's in January 27. So here's the stock trading right now. So you can see here that my break even to the downside on expiration. So this is between now and January. So if the stock is above 125 by January, you're breaking even. As long as it doesn't go above 191 by January, you're making money. So this is a trade that is a theta positive trade, meaning that it makes money with time. It's another version of a collar trade. And there's an infinite number of structures from a collar trade, but I think these are the two most important ones to master. Is one that does well in an so let me compare and contrast. So this one, we don't want the stock to move too much, goes up a little bit, okay, goes up kind of a lot. Maybe we start looking at unwinding or rolling the trade. Alternatively, we've got this explosive one that we started off with, and here's one that you're pretty safe in the short term for the next week or two, but then you need to start thinking about where this thing is going to go. And if the stock makes an explosive move up or down, I have one of these that I put on last week, a similar structure to this. And when I put it on, the strikes were up around, I think 160. And so my trades right down, it would be like as if the stock dropped to 110. That's what mine looks like right now, that I have in my real money account. So this is, I was just thinking that there's a lot of shareholders out there that are like, please stop the pain. And my suggestion is that you educate yourself on a collar trade, because you can stop some of the bleeding by getting into a trade like this. Now, of course, everybody needs to understand the rights and obligations of options. My suggestion is you paper trade this or find yourself a good education. Like where, Greg? Where should you?
Yeah, there's a company out there that teaches how to do this strategy. I've got to share my my 2 cents on, I learned this in real time, in real money, when the internet bubble was bursting. And it was companies like AOL and JDS Uniphase and CMGI and WorldCom that taught me this strategy of how to hedge risk and stop the bleeding amidst the collapse. And, whether you think Tesla is going to continue to collapse or whether you think this is the bottom, you don't know that 100%. And that's the comfort that this strategy gives you, is you can still look at Tesla and say, I believe in the EV market. I believe in this company that not just Elon has built. Yes, Elon's the head. He's the visionary for it. He's got a lot of brilliant people who work around him at Tesla and have built a fantastic company for the future, that if I look back 20 years ago, 25 years ago, this is where Amazon was, maybe even a little fast forward to where Amazon was. And I think Tesla is still in a position to dominate the EV market with brand loyalty and the quality of their products, even in comparison to the other big auto manufacturers. I know other people are saying, oh, Elon's opening up the window for competition and people are going to leave Tesla. I disagree. It's brand that he's built and his brand awareness with Tesla that I think is a fantastic opportunity, doesn't take the risk out of the short term with the stock. So to me, this trade is the answer. for what's going on with Tesla right now, for sure.
Well, I'm a big fan. I have a Tesla solar roof, the one that has the panels that they actually look like shingles. They look like glass tiles is what they look like. So it looks like an ultra premium roof. So it's sexy as hell. And we got a little bit of snow. We got a lot of snow coming too. But the nice thing about that roof, it's got an advanced snow removal system. Some people call that avalanche.
I was gonna say it's called avalanche, right?
It just comes off. It tends to come off in like 6-foot sections. So we hear doo, 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 and it just comes off. So luckily it's not where it gives you a little bit of warning. So it's never fallen on anybody. But yeah,
I need to come see your roof. I have not been to your home in a few years.
Yeah,
since you had it
to Chicago this summer. We'll go to a Cubs game.
There you go. Yeah, since half my Dodgers now play for the Cubs.
There you go. That'll be awesome.
Maybe not half. I was looking. Sorry, I'm going to go off on the Dodgers a little bit. Did you see they let Justin Turner go?
No.
Sad. I'm sad. My Dodgers team that won the 2020 World Series, Corey Seager's gone. Kike Hernandez is gone. Justin Turner's gone. Cody Bellinger's gone. Kenley Jansen's. Anyway.
Are you surprised?
I'm shaking my head at the Dodgers right now.
All right. So I wanted to just put a plug in for our two companies that we're both involved in. One is OptionsANIMal, which is the best education company that's out there. If you want to learn to trade stocks and options, this is the place to go. The collar trade is a trade that's, I said it takes a minute to learn, but a lifetime to master. I hope it doesn't take a lifetime to master. I think that's our goal is to shorten that learning curve to be as short as possible. But it is a trade that's dynamic and does require adjusting. So learning how to do that is key. And once you understand how to manage with a collar trade, it is literally life changing because it'll take stress off of your life. People, I think about all the collar trader or all the Tesla shareholders or other big tech companies, Amazon or Meta or whoever right now. I can tell you that you'll sleep better at night knowing that you can protect yourself. The other company we talk about, Trader Oasis, which is our trading solution. So we have a trading platform that offers very compelling commission fee structure with some pretty damn cool pricing and features. So feel free to check us out at traderoasis.com and either there or on OptionsANIMal and ask some questions. I know a lot of you watching are already clients of both, and we really appreciate you. So, well, bummer about the Dodgers, man. So Christmas is coming though, so maybe Santa Claus will bring you a surprise.
Yeah, maybe we'll get. Nah, I'm not even going to talk. I'm just not even going to talk.
All right. Well, anything to add? I think this is hopefully we get this one out right away for some people. I think some people could benefit from it. Again, make sure you understand your rights and obligations. Nothing in here was trading advice, but we're just showing you the sort of stuff that we do in our accounts and the stuff that we teach our clients how to do.
I would say other than if I decide to do a short video between now and Christmas, which who knows if that'll happen or not, I'll just add Merry Christmas, everyone.
Okay. Yeah. Merry Christmas and Happy New Year and Happy Hanukkah or Kwanzaa or whatever you're celebrating. So best holiday wishes to everybody. Thanks for being with us and leave feedback and look forward to hearing from you soon. Thanks.